Hello and welcome to our channel. In this YouTube video, we will delve into India's monthly economic update for the month of May. Let's explore the latest insights and trends shaping India's economic landscape during this period. Stay tuned for a comprehensive analysis of key economic indicators, growth projections, and significant developments impacting the Indian economy in May. Thank you for joining us on this informative journey. Now let's discuss about GDP. Multiple international agencies, including the IMF, have revised upward India's growth projections for 2024, with the country's economy now forecast to expand by close to 7% this year, mainly driven by strong public investment and resilient private consumption. This upward revision was made by the UN in the World Economic Situation and Prospects as of mid-2024, released on May 16, 2024. The 6.9% economic growth projections for India in the mid-year update is an upward revision from the 6.2% GDP forecast made by the UN in January this year. This upward revision is primarily driven by two key factors. Strong public investment. India's robust public investment is a major contributor to the improved growth outlook for 2024. Resilient private consumption. Private consumption in India has remained resilient, supporting economic growth. India's labour market indicators have also improved amid robust growth and higher labour force participation. The government remains committed to gradually reducing the fiscal deficit while increasing capital investment. Now let's discuss about CPI. According to the quick estimates on May 16, 2024, India's Consumer Price Index CPI inflation eased to 5.09% in April 2024 from 5.1% in March. This marks the sixth consecutive month that retail inflation has remained within the Reserve Bank of India's RBI target range of 2 to 6%. The rural inflation rate stood at 5.34% in April, unchanged from March, while urban inflation marginally declined to 4.78% from 4.92% in the previous month. Food and beverage inflation increased to 8.66% in April compared to 8.3% in March. Despite the moderation, India's CPI inflation has remained above the RBI's medium-term target of 4% for the 54th consecutive week as of April 2024. The central bank is expected to maintain its accommodative monetary policy stance to support economic growth while keeping inflation under control. The easing of inflation in April 2024 aligns with the United Nations revised projection for India's consumer price inflation to decelerate from 5.6% in 2023 to 4.5% in 2024, staying within the RBI's target range. The upward revision of India's GDP growth projection for 2024 to 6.9% from the previous forecast of 6.2% made in January is mainly driven by strong public investment and resilient private consumption. Now let's discuss about the export-import. As per the report released by Ministry of Commerce and Industry on May 15, 2024, India's merchandise exports in April 2024 grew by 1.07% to $35 billion compared to the same month last year. However, imports surged by 10.25% to $54.1 billion during the same period, primarily due to a sharp rise in global oil and gold prices. The increase in imports, particularly of gold, which tripled to $3.11 billion from $1.01 billion in April 2023, and a 20.2% rise in the oil import bill amounting to $2.8 billion, led to a 32.3% year-on-year expansion in the trade deficit to $19.1 billion in April 2024. The Ministry of Commerce and Industry revised its estimates for total exports in 2023-24 to $778.2 billion from $776.7 billion estimated last month, reflecting a 0.42% uptick over the record figure of $776.4 billion achieved in 2022-23. This revision was based on updated services exports numbers now pegged at $341.1 billion in 2023-24 compared with $325.3 billion in 2022-23. India's total exports, merchandise and services combined in April 2024 is estimated to be $64.56 billion, exhibiting a positive growth. The breakup is as follows. Merchandise exports $34.99 billion. Services exports $29.57 billion, estimated as the latest data released by RBI is for March 2024. Total imports in April 2024 amounted to $71.07 billion, comprising merchandise imports $54.09 billion, services imports $16.97 billion estimated. The trade deficit in April 2024 stood at $6.51 billion. For the full fiscal year 2023-24, India's overall exports reached a record $776.68 billion, marginally higher than the previous year's $776.40 billion. This was driven by a 4.4% growth in services exports to $339.62 billion, offsetting a 3.11% decline in merchandise exports to $437.06 billion. The World Trade Organization forecasts a 2.6% increase in the total goods trade for 2024, rebounding from a 1.2% decline in the previous year. Commerce Secretary Sunil Bathwal expressed hope that the positive growth for merchandise exports in the first month of the fiscal year is a good omen, stating that the WTO's slightly better growth projection for this year and improved growth rates and inflation reduction in the Western world could improve trade prospects. Now let's discuss about Index of Industrial Production (IIP). According to the latest data released by the Ministry of Statistics and Program Implementation (MOSPI) on May 16, 2024, India's Index of Industrial Production (IIP) grew by 5.7% in February 2024 compared to the same month last year. The mining, manufacturing and electricity sectors recorded growth rates of 8.05%, 5.01% and 7.53% respectively in February 2024. The cumulative IIP growth for the period of April 2023 to February 2024 stood at 5.8%, higher than the 5.1% growth recorded in the corresponding period of the previous fiscal year. The manufacturing sector, which has the highest weight in the IIP, saw a growth of 5.01% in February 2024, a significant improvement from the 3.57% growth recorded in January 2024. The use-based classification of the IIP showed robust growth in primary goods 8.2%, capital goods 6.2%, intermediate goods 5.9% and infrastructure or construction goods 7.8% in February 2024. However, consumer durables and consumer non-durables saw slower growth at 2.1% and 4.9% respectively. The strong performance of the IIP in February 2024, despite a higher base in the previous year, suggests a genuine pickup in industrial activity driven by robust domestic demand and improved export prospects. The government remains committed to gradually reducing the fiscal deficit while increasing capital investment to support economic growth. The major industries that contributed to the growth of India's Index of Industrial Production (IIP) in May 2024 were manufacturing sector. The manufacturing sector played a significant role in driving the growth of the IIP in May 2024. It recorded a growth rate of 5.7% compared to a 20.7% expansion in the same period a year ago. Mining sector. The mining sector also contributed to the growth of the IIP in May 2024, with mining output rising by 6.4% during the month compared to 11.2% expansion in the year ago period. Electricity sector. The electricity sector saw a positive contribution to the IIP growth in May 2024, with power generation rising by 0.9% compared to a growth of 23.5% in the same period a year ago. These industries collectively played a crucial role in driving the overall growth of India's Index of Industrial Production in May 2024, reflecting a broad-based improvement in industrial activity across different sectors. Now let's discuss about the foreign exchange reserves. India's foreign exchange reserves have witnessed a significant surge in May 2024, with the latest data from the Reserve Bank of India (RBI) indicating a rise of USD 2.6 billion in the week ending May 10, 2024. This marks the second consecutive week of growth following a period of 3 consecutive weeks of decline. The total foreign exchange reserves now stand at USD 644.151 billion, with foreign currency assets (FCA) increasing by USD 1.488 billion to USD 565.648 billion. Gold reserves also saw a notable rise of USD 1.072 billion to USD 55.952 billion during the same period. This growth in foreign exchange reserves is a positive sign for India's economy, which has been facing challenges such as high inflation and a widening trade deficit. The RBI's efforts to manage the exchange rate and maintain market stability have contributed to this growth, with the central bank intervening in the market to prevent excessive volatility in the exchange rate. The cumulative growth in foreign exchange reserves in 2024 stands at around USD 23 billion, indicating a sufficient improvement from the decline of USD 71 billion seen in 2022. This growth is expected to continue, with the RBI aiming to bolster the forex reserves further to maintain economic stability and support the nation's growth ambitions. The growth in foreign exchange reserves has been driven by a combination of factors, including an increase in foreign currency assets and gold reserves. The RBI's strategic interventions in the forex market have also played a crucial role in managing exchange rate volatility and maintaining market stability. Overall, the growth in India's foreign exchange reserves in May 2024 is a positive development for the economy, indicating a strengthening of the nation's economic resilience and its ability to manage external shocks. Now let's discuss about Purchasing Managers Index. India's Manufacturing Purchasing Managers Index (PMI) rose to 58.8 in April 2024, up from 58.0 in March, indicating a robust expansion in factory activity. This was the highest reading since November 2022 and marked the 25th consecutive month that the index has remained above the 50 level threshold, separating growth from contraction. The uptick in the manufacturing PMI was driven by faster increases in new orders and output, with firms reporting strong demand conditions and marketing efforts bearing fruit. New export orders expanded at the quickest pace in nearly 2 years, with anecdotal evidence highlighting demand growth from Australia, Bangladesh, Brazil, Canada, mainland China, Europe, Indonesia, the US, and the UAE. The rise in new orders led to a further accumulation of input inventories, while supplier delivery times remained broadly stable. Concurrently, purchasing cost inflation retreated to a 43-month low in April, with selling charges increasing to a lesser extent as a result. Buoyed by robust demand and improving profit margins, manufacturers maintained an optimistic outlook about the future business conditions. However, despite the strong growth momentum, manufacturing employment in India was little changed in April, with firms mentioning that payroll numbers were sufficient for current requirements. The latest results also indicated that capacity pressures at goods producers remained mild, as seen by only a slight increase in work in hand. Now let's discuss about the capital expenditure. The current status of capital expenditure in India for May 2024 stands at an allocation of Rs 11.11 lakh crore for the financial year 2024-25. This allocation represents an 11.1% increase from the previous year and reflects the government's focus on infrastructure development and investment-led growth. The significant rise in capital expenditure underscores the commitment to economic growth and employment creation, positioning India for sustained development and progress. Now let's discuss about the FDI. The current foreign direct investment (FDI) inflow in India for May 2024 is $10.58 billion, reflecting a significant decline of 62.17% compared to the previous year. This decrease marks the lowest net FDI into the country since 2007, as reported by the Reserve Bank of India's bulletin for May 2024. The falling foreign direct investment (FDI) in India for May 2024 can be attributed to reasons such as sharp drop in fresh equity inflow, rising disinvestment by foreign companies, pre-election nervousness affecting investor confidence, global economic conditions, sector-specific impacts, tax uncertainties, and export challenges. These factors have collectively contributed to the decline in FDI inflows, highlighting the need for policy measures to address these challenges and attract foreign investments for economic growth. Now, let's discuss about the government schemes. PM Suryodaya Yojana Rooftop Solar Scheme, a scheme aimed at providing 300 units of free electricity per month to 1 crore households through rooftop solarization. Housing schemes for middle class families, a scheme to assist deserving individuals from middle class families living in rented houses, slums, chawls, and unauthorized colonies to build or buy their own houses. Vaccination scheme for girls, an initiative to encourage vaccination for girls aged between 9 to 14 years for the prevention of cervical cancer. These schemes reflect the government's focus on renewable energy, housing, and healthcare initiatives to enhance the quality of life and promote sustainable development in the country. That's all in the video today. Thank you for watching our monthly economic update for May 2024. We hope you found the insights informative and valuable in understanding the current economic landscape of India. As we conclude this video, we would like to express our gratitude to our viewers for their continued support and engagement with our channel. Your interest in staying updated on India's economic progress motivates us to bring you the most accurate and timely information. Please provide us your feedback and let us know what else would you like us to include in the next months and other future updates. We wish you all the best and look forward to seeing you in our next video. Until then, stay informed, stay ahead.